Welcome back. Now it's time for Forum Daily's weekly market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing markets a little bit mixed this morning, but that follows a very strong rally yesterday, which saw the S&P closing at its highest level since June and the Nasdaq up by about 2.6%, the highest level we've seen since May of this year. The risk-on areas of the market were particularly strong, so think some of the FANG stocks, so Facebook, Amazon, and Google. And we also saw some real strength in specialty retail as well as travel, such as airlines, and also media and home builders. Energy stocks, however, yesterday were quite a bit weaker, following the price of crude down, which down by 4%, WTI that is, trading actually below the $90 level. That's the first time we've seen that number since Russia invaded Ukraine. We'll see if that can continue. A lot, of course, to debate as it relates to the outlook for energy and the lack of supply globally. But why the rally that we're seeing? Well, there's a lot of discussion about peak inflation and peak Fed speak. What does that mean? That perhaps we have seen the highest levels of inflation, and therefore the U.S. Federal Reserve will not need to raise rates as fast or as high as previously priced into the market. So again, peak Fed moves. In fact, and interestingly, some market participants are believing that the U.S. Federal Reserve will in fact lower rates in 2023. The Fed has pushed back against that thinking, but nonetheless, that is out there in the market. So that acts as a bit of a tailwind for the broader equity markets and risk-on markets. Now, of course, when we think about what's next and what to watch for, all eyes on the U.S. and Canadian jobs report, which will be out tomorrow morning. That will give us a good read in terms of what the economy really looks like and how much has it in fact slowed down, perhaps because of some of the rate hikes. Also supportive of the market moving higher, the view that perhaps recession fears are in fact overdone. And importantly as well, we are in the midst of second quarter earnings results in the United States as well as Canada, and it seems that the results have come in better than feared. Keep in mind, however, to counter the positive movement in the market, all eyes, of course, from a geopolitical perspective, are on China stepping up military drills in Taiwan, following, of course, Nancy Pelosi's controversial visit to Taiwan. In terms of stock news, as I mentioned, so much focus really just on earnings results and how the stocks act post the results. Restaurant brands, the ticker there is QSR, it's traded in Canada as well as the United States. They, of course, are the owners of Popeyes, Burger King, and Tim Hortons. They did have a revenue and earnings beat. And interestingly as well, the same store sales numbers, so the comps, were actually back to pre-pandemic levels at Tim Hortons. So really a nice recovery there. That stock moving higher today. Alibaba, that stock's up by about 4% on the back of a revenue beat at that company. And I also always like to take a look at some of the chemical companies. Albemarle, for one, the ticker there is ALB. It's in the United States. Chemical companies, to me, give a bit of a read on what's going on in the economy. And they had a very strong beat. And in fact, their pricing going forward is going to be up by about 225% because renegotiated contracts. But their bromine specialties business really drove the upside. That is used in dyestuffs and insecticides, chemicals, as well as pharma. So again, it can be a nice read on the economy. So keep your eyes on that one. And also their lithium EBITDA guidance was also raised quite meaningfully, in fact. So Q2 beat and revenue in line over at Albemarle. We did see Eli Lilly miss on the revenue front. They've got lower realized prices and a little bit of generic competition. Meanwhile, as we look at the TSX, it was up mildly yesterday, not mildly today. It, of course, is weighed down by the price of WTI, much more of a weighting in energy in Canada versus the United States. We're also keeping our eyes on earnings here. Sun Life Financial came in better than expected. Maple Leaf Foods worse than expected, and CNQ in the energy sector better than expected. Housing very much in focus here in Canada. That's after the Toronto and Vancouver real estate boards reported a steep drop in sales and also prices in Toronto down by about 23-24%. We're keeping our eyes again on jobs reports in Canada. 20,000 is expected, and also for an uptick in unemployment to 5%. There's also the expectation that the Bank of Canada will raise the rates by about 50 basis points when they meet in September 7th to be exact. And lastly, just on the international market front, the Bank of England did raise rates by 50 basis points as expected, the biggest hike since 1995. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of the Buck Stops Here, which airs Sunday mornings at 9 a.m. Eastern only on the News Forum Network.